Well, the answer is I do believe in dividends in a great many situations, including many of the ones, companies in which we own stock.
The markets are shaking at the fundamentals. Donald Trump has announced new tariffs that could fundamentally affect not only global trade, but also your wallet. The stock markets reacted immediately. Sharp sell-offs have been triggered, volatility has skyrocketed, and panic among investors is where it hasn't been this year. What does this mean for the world economy? Are we on the threshold of a new trade war? And how should we behave in this chaos? These questions are answered by the so-called super investors who have been predicting these fluctuations for months in advance and have been preparing carefully for them. Which stocks did they buy and are now profiting from them? The year 2024 was marked by high inflation, rising interest rates, and geopolitical uncertainties. In such an environment, investors are often looking for stable and at least somewhat predictable sources of income. This makes dividend stocks, companies that regularly pay out a portion of their profits to their shareholders, an attractive option. They offer not only regular income, but also the potential for capital growth, which is highly valued in uncertain times. Super investors do not aim for appreciation in the hundreds of % per annum like speculators or traders with much smaller capital. The moment you have several million or even billions of dollars at your disposal, you invest differently. The main thing you care about is not losing money, so you are much more likely to choose investments with a lower level of risk, but also potential return. But not always. One example is Warren Buffett, who is famous for his investment in Coca-Cola. That's a defensive stock that has paid a long-term dividend, and its stock has appreciated 150% over the last 25 years. Contrast this with Buffett's investment in Apple, a technology growth company that has appreciated 920% since his first investment in 2016. Moreover, Apple only started paying a dividend in 2012, and its current dividend is 0.45%, which is quite low compared to Coca-Cola's 2.85%. Now that we know how these super investors think and how they often invest, we can take a look at the companies that have gained their greatest favor in the last quarter of 2024. The sectors that were most bought by these investors were technology and financial services. It wouldn't be so unfamiliar if the healthcare sector hadn't gotten there in 2024. Yes, that's right. This extremely defensive sector, if you don't take out the small experimental startups trying to develop new drugs, is second only to technology and not much talked about among investors. Let's take a closer look at it and uncover why the big investors are focused on it right now. If we look at a chart of the S&P 500, we can see that the index is down 4.4% since the beginning of the year. But if we look at a chart of the Vanguard Healthcare ETF, which as the name implies tracks the performance of the healthcare sector, the chart is up less than 5% since the beginning of the year. So for the first quarter, we're talking about a solid difference between the two charts. And by the way, according to stock market history, this is the segment that beats the indexes in bear markets, and we can take advantage of that. Recently, JP Morgan published a chart showing the P/E ratio over the last 5 years between the S&P 500 and healthcare stocks. Over the past few months, these scissors have widened considerably. While the S&P 500 trades at a P/E of around 21, the healthcare sector has ballooned to 17 points. And as we said a moment ago, we can actually see a logical reaction on the charts since then. And that's exactly why it's a good idea to track not only the insiders, but also these big players in the stock market. Take a moment to think about how many stocks in the healthcare sector you've included in your portfolio over the past year, relative to the technology stocks that have been in the spotlight for a long time. You can seed it in the comments to see where you stand among other investors. What it also shows us is that super investors were already slowly getting into more defensive sectors in the last quarter of 2024, and not just focusing on growth sectors. Well, what hasn't been happening in the stock market since the beginning of the year? Mag 7 stocks are falling, and with them, the stock indices. But what is definitely not falling, on the contrary, is the number of subscribers to our channel. So join us and don't miss any more top information from the world of stocks. Let's take a look at what stocks these investors have been buying. All the stocks you will see they have bought in the past quarters as well, so they are betting on them for the long term. Surprisingly, these will be mainly companies from the sectors already mentioned. And lest we forget, of course, all of them pay dividends. The fifth most bought stock was Bank of America. Its dividend yield is currently 2.44%. In the fair price index on Bulios, which is based on DCF and relative value calculations, its shares are currently undervalued, and significantly so. So it's not surprising that investors are interested in it, despite Warren Buffett selling it off in the last quarter. United Health Group was next. Remember that healthcare sector? Well, here it is in all its glory. With a dividend of 1.6% and a capitalization of $479 billion, this stock is a colossus of sorts. It's also severely undervalued by fair value calculations. Both of these companies have been in the green since the beginning of the year, despite what's happening in the markets. If you still don't recognize this and are wondering where you can find all this information, just take a look at the stock detail on 𝗕𝗂𝗶𝗎. The exact data you see there, and you see it now in the video, can be found for thousands of companies, so feel free to check it out. But Google is interesting. It's still up over the last year, but it has already weakened quite significantly since the beginning of this year. If we look at the company's metrics, such as its PE ratio, we find that Google is currently trading around 19. That's not only relatively low compared to other similarly sized tech companies, but it's also low compared to its average PE over the past decade. Google is currently valued 23% lower by this metric. But Google is a quality stock, and one of the many metrics that confirms this is ROIC, or Return on Invested Capital. It is currently 25.8% and has been above 20% for 4 years. CVS Health may surprise many, but it brings us back to the healthcare sector. Some may have registered the huge drop in this company's stock last year, when the price per share plunged 42%. Investors on 𝗕𝗂𝗶𝗎 discussed the situation surrounding this stock and also shared their insights and suggestions for their fair price here. Thus, the events on 𝗕𝗂𝗶𝗎 are always worth following. This year, however, the stock is already up 49%, outperforming the S&P 500 by a huge margin. Oh, and finally, let's take a look at the most bought stock ever by super investors in the last quarter of 2024. It's Microsoft. Why Microsoft? The simple answer would be that it's the only one of the biggest companies that hasn't grown at all over the past year. Microsoft's stock performance over the past year is only 3%. Despite this, the company's business has grown steadily. The dividend has also continued to pay out. It is at 0.84%. And in every quarter reported last year, it managed to beat analysts' estimates in both earnings per share and revenue. Microsoft has tremendous potential in the AI and cloud sectors, but it also still has very stable parts of the business outside of that segment. Investing in stable dividend stocks can be a key strategy in uncertain periods, as these stocks often outperform growth stocks that are more sensitive to changes in interest rates and economic cycles. And that's exactly the period the markets have been in so far this year. Stay tuned for the next video, so be sure to subscribe so you don't miss out. Do you have any of these stocks in your portfolio? Let us know in the comments. Good luck with your investments.